All right, welcome everybody who has filtered in so far. This is the FinTech CEO Fireside Chat. My name is Rachel Carpenter, the founder and CEO of Intrinio, and we're going to dive in. I would like to introduce everybody to our featured speaker, Joe Stensland, who is the CEO of BridgeFT. BridgeFT is a FinTech like Intrinio, but even more specifically a wealth tech company. And they are all about data, which, as you know, is right up my alley. So Joe's a brilliant CEO. We have a lot to learn from him today. So let's dive in. Joe, welcome.
Thank you for having me. Appreciate it.
No problem. Would you mind just giving the audience a quick overview of your kind of personal background to give them a little bit of a stage setting?
Yeah, for sure. I've been building digital experiences for advisors and investors for some 25 years, going back all the way to Thomson Financial, prior to Thomson Reuters. My team and I there launched the Wealth Management Group and also launched Thomson One Wealth Management, which is still a platform used today, remarkably. From there, I moved on to SciVantage, where we built digital client experiences. We started off launching Internet Brokerage 1.0. So firms like Trade King and Bank of America's brokerage site were things that we launched, moving that into more of a wealth management digital. That company sold to Refinitiv, and so while I was sitting at Refinitiv thinking about what to do next, I'd spent a lot of time creating experiences, and the front end was always very, very important to the client. We would have to do a lot of work or changes, and that was where they found their own differentiation and their unique attributes about what they wanted to do with their business. But the back end was infrastructure, was must have, but little opportunity to differentiate yourself. But it was a lot of work and a lot of service. And so when I was thinking about what to do next, the whole e-commerce market was interesting to me, because that is very much about infrastructure. Firms like Stripe and Shopify provide the ability for people to build their own properties that are uniquely theirs, but to leverage all the infrastructure and not have to spend time building the same plumbing that doesn't really differentiate them. Right. So while I was doing that, the CEO search for Bridge came along, and Bridge had been serving individual RIAs primarily, but they built a API first cloud native platform, and they built their own multi-custodial data aggregation platform. And it was quite unique from what was out there. And in my mind, part of what I needed to figure out in this infrastructure play was the data. And that's why we're here today with you, is that in building all the things that in the past that we've built, it's the first two things are I need the customer account data and I need market data. And from there, just about every display spins off of those two things. And so that's what I think is a unique differentiator about firms like ours today is how they leverage API and let the firms do their own differentiation.
Yeah, big fan of the infrastructure plays in the fintech space. It's such a critical aspect of everything. I mean, everything in this business runs off of data. So I think you guys have great business going. Can you tell the audience a little bit about who are the typical clients you serve? And what is the BridgeFT value proposition? Why are they coming and working with you guys, and how is it different?
Yeah, sure. Our target clients are fintechs themselves. So we like to say that we're the wealth tech behind the best wealth techs. We have a similar motto to yours of developers, by developers for developers, because of the API approach. It's a headless platform. The target market around fintechs, but then also wealth management firms. We're a strong believer that wealth management firms will continue to invest more aggressively in technology, primarily in the areas of owning their digital experiences and the areas that differentiate them, which sit outside the infrastructure area. So that's a perfect opportunity to leverage infrastructure to get there faster, cheaper, and better.
Yep. Fantastic. I love to hear that as a data provider to fintechs myself, right? The more customization, specialization, the more tools and data and different things these wealth managers are going to need. So I think it's an industry that hasn't had a lot of innovation in quite a long time, and a lot of reliance on kind of third-party apps and tools and things like that. So it's an interesting evolution it's going through. Can you tell us a little bit about, coming in as a new CEO to an innovative company like this? I'm sure it feels the same as being a founder, because it's like brand new and a roller coaster. So what were some of the big changes that you made, or any kind of major shifts that you went through when you first joined as a CEO?
Yeah, so one was business model. the focus change that we did from essentially a B2C selling individual advisors to a B2B enterprise platform, which is what I've been involved in the past, was a big change. That's a culture change. It's a change in how you do what you do. For me, the biggest thing about any place that I've been, Bridge included, is the team. So I've always valued team above individual, and the strength of a team, significantly outpaces putting a bunch of A players that don't get together and don't work together. So those two things are kind of key. So we made some changes to some of the team. There's a lot of the team that's here. A lot of the original architects are here. And then building that culture around the common goal. Everybody, if people internal to the company can't talk about what's great about us, then I can't expect them to do it outside and tell it to the market. And so that takes a while. And as a company that's starting to build this new thing, you're learning while you're doing it. And so that message is changing. You're realizing as you interact with your customers what becomes more important, areas that you should focus on more and focus on less. So when it comes to Bridge, the differentiator for us really is API first. It is this mantra that we are a headless infrastructure platform that helps you build your wealth management application better, faster, cheaper, period. And right now we focus a lot on custodial data and multi-custodial data. We have engines that are around billing and reporting. We do enrichment like performance, similar to how you view it. But the scope for us in that mission of helping you build wealth management applications better, faster, cheaper is very, very broad. I believe that the current lineup of wealth management applications, if you look at the Kitsis map, for example, it doesn't make sense. There's a lot of individual bespoke, platforms that you have to stitch together, and they don't represent the true customer journey that the firms are trying to build. So that means there's going to be retooling, and when you're retooling, they're going to be building their own platforms, and there's an opportunity for firms like us to provide the infrastructure to help them do that better.
Right. Yeah, let's go back and touch on a few things you mentioned, because I think the people aspect of being a CEO is so huge. And I think it's super wise for you coming in to say, well, we've got to get this right first, right? We have to have the right people with the right, knowledge of the business and ability to pitch it and on the same page, pushing the ship in the right direction. It's so undervalued. And I think it's easy as a CEO to get distracted by other things. But if you get that right, everything else becomes a lot easier, because then you've got really smart people that are working for you, and you're not actually having to, they're making great decisions and running them past you, and so it's such an undervalued part of being a CEO. And I don't know if this transfers, but it makes me think of this, I can't remember where I saw it, but I saw a study recently that was they did a super long, 90+ year study on happiness and success for individual people. And the #1 indicator of your long-term happiness is the partner that you choose in life. Not your career or anything else. It's getting the people right is the most important indicator of your lifelong happiness and success. And I got to imagine the same thing is true for business. I mean, it's, in my experience, it's been the case. So that's probably why we get along so well, because we both have great people working for us.
I think if highly successful people and people that are driven, CEO is the hardest job. I can tell you that, and there's a lot of hard jobs, but successful people tend to believe that they can do things better themselves, and so you take on a lot, and you get a little particular in how you want things done, and so then you end up doing more of it yourself. That's not scalable. But not only is that not scalable, that's not the best outcome. Smart people with good ideas, putting their brains, 3 brains is better than 1. I don't care what brain it is. And so if you can push that down, and then more importantly, teach them to push it down, amazing things happen with great teams. Great teams build themselves. Great teams hire, like-minded people that come into the team, and the production is just far beyond what you would get if you put together the typical, A players and seats that don't get along and don't create a team. I'll take a solid B player team all day long over a bunch of individuals that are highly performant, but they don't work as a team. There's just no benefit there.
It's such a great point. You can hire, I've had this experience, you can hire the smartest person in the world, but if they don't get along well with their colleagues, or there isn't a cohesiveness. I've had the same exact experience. You're absolutely right. Nobody's smart enough that you can be willing to overlook the collaboration and the cohesiveness. That's such another critical point.
And
so
that's where the critical new ideas come from. They don't, you know that after you get in and you're worried about every single thing as a CEO, you're not able to spend every single day thinking about what the critical next thing is. And good teams that are there working together doing that come upon that, especially when they involve the clients very closely in that mix. That's been another big thing that we did, you know, historically. I've had been at firms with a lot of clients. I've had the benefit here that we've got a lot of clients, but not, you know, we're new. So spending the time and learning, especially when we're in a new area, introducing something new, our clients can tell us a lot more about where we should be going if we listen correctly. You have to mix that with your strategy and where you want to drive the business too, because you can't just, you know, the typical scenario where clients are going to tell you what you should have done yesterday is truth in some cases. But that's another people play. It's all about relationships and connecting people.
Sorry to be throwing studies out there, but I spend a lot of time thinking about this, right? Because people is our #1 job as a CEO. And there was another research study that was on brainstorming, kind of like, you know, strategic leadership brainstorming sessions. And they took 2 different groups, and one group was they did the round robin icebreaker thing in the beginning of a brainstorming session that everybody hates, right? And it's like they shared their most proud thing they were proud of lately. And then they went on to the brainstorming session. And then the other group shared something like really vulnerable. Like, what did they screw up in the past month? Or like, what was the biggest thing? Like, and the group that shared their vulnerabilities together before they got started brainstorming had like 10 times better outcomes than the people who were like, here's what I'm great at, and here's what I did a good job of. And so it's like, it's another interesting tidbit, right? Because then it's like, you've got to not just find people that are competent and work well together, but that are humble, right? And vulnerable and willing to have those kinds of conversations, because the outcomes
are true. Yeah, you won't find those strong teams if there's lots of people in there with egos and can't admit that they do anything wrong. I was involved with one of those, and I hate those as well, the icebreakers. But the one that was the best, just exactly what you said. The question was, what are you not good at but nobody knows yet? And answering that honestly is very vulnerable, no matter who you are and no matter what situation you're in. But I can imagine from what you said about the study that opens everybody up. Like if somebody can do that, then everybody else is going to be honest, and then you're going to get to the truth and then figure out how to get the best outcome.
Exactly. Yep. Totally agree. So the other thing that you mentioned is so interesting to me, because we have a similar model at Intrinio, right? In our case, everyone assumes that we're like building if we say financial data, they're like, oh, you're building a Bloomberg terminal. I'm like, no. We are an API company. Like, this is a very different approach to delivering data, right? We are empowering people to build their own version of the Bloomberg terminal or whatever they're building, right? And it's crazy, because APIs have been growing in prevalence and expanding for decades now. And there are still so many people that are only familiar with apps and don't understand APIs. And so we've lived a very similar thing to you guys, in that, like, we originally started with a website that showed the data, and we had like an Excel add-in, an Excel plugin, and then we wiped the whole thing away and we went, nope, we're going to be infrastructure, we're going to be APIs. This is the future. This is where we're focusing. And it sounds like you guys had a very similar path, right? So talk to me more about that, because it's so interesting to me. It's like, is the idea that kind of RIAs and wealth platforms previously just used existing apps, and now there's so much innovation happening that they're building their own things, their own apps? Is that kind of where the shift has happened to open up the opportunity for an API-based platform?
Yeah, that's true. I think it's also the size of the firm. So when you think about the investment area and you think about brokerage firms as an example, the wirehouses have always built much of their own technology. Merrill Lynch has got more technologists than most technology companies have. And so they've always been able to do that. So I like to say that we're helping to lower the bar so that the rest of the industry can do that, because we're democratizing the access to this information and making it easy to build. The example that you give about, is a challenge that we have too. Like, I'm working on a new pitch deck, and I have to set the stage, because everybody says, give me a demo. And it's like, well, it's going to be real boring to walk you through my API docs.
Can't do it.
And if you want a demo, then I'll bring a developer, and bring your developer so they understand what they're doing, and we'll show you, how it works. And that's one of the clearest and first qualifications as are we going to find our way there? That said, the firms are not all immediately available or have the resources to do that. So we've done some work with some partners, development partners that are skilled in using our APIs that could build, for example, a client portal from our API, because the firm may not have their own. And that's actually happening more and more too, because the need to have differentiation is critical. You can't give the same application service to an investor from two different firms and then say that those two firms are differentiated in that, like a financial planning report. So that's going to drive firms to do what the larger firms have always done, and that's going to continue to push it down. And to differentiate yourself, technology is not just what makes the books and records and back office run. Technology is the only thing in many cases now that the firms touch. Look what happened to banking. There's only one Bank of America branch in my town anymore. It's because it's all on the app. And did Bank of America buy that app from some bank app developer? No, they built their own because they find that it's unique. And that goes all the way down to probably the number 50, 75 bank on the SNL list. And that's going to go down further. So APIs and what we're doing helps democratize that. It helps make that accessible, and it helps lower the bar so that firms can seek that differentiation without having to do all of that infrastructure build. I always use an example of, imagine a house builder that has a great idea, found a great, huge section of property and wants to do a development. They don't start off building a power plant. They don't start off putting their own sewer in. That all comes from infrastructure. If they did that, the houses would be 10 million bucks, or they wouldn't do it and they wouldn't make money. We're doing the same thing in technologies. I want to take half the cost out of your build project by giving you the APIs that have raw materials and enriched and higher level building blocks that I've created for you as we go along, so that you can assemble that. And the final assembly is what's going to be uniquely yours and differentiated. But the core stuff, you're not going to make a difference if you do that yourself. You're just going to waste a lot of money.
Joe, I'm going to steal that analogy from you, because it's such a great, I always use, like, we're the nails and the bricks and the wood that you need in order to build your house, but the sewer and the connect and the electricity and everything makes even so much more sense, right? That's an analogy that people can get behind and understand.
My marketing team always tells me not to use the sewer part, because it's like
they're like, pick any other resource, please don't use the Oh, I love it. I'm curious if you run into any challenges, because our models are so similar for different types of data. We've seen something similar in that, like, large investment oriented platforms, rather than wealth management, more kind of like trading and investing for us, they're starting to behave like fintechs, right? So we're getting more and more institutional clients coming on board saying, whereas previously we might have done this a different way, now we actually we're building, right? Like, we're a big company, but we're going to build, we're going to innovate, we're going to build a new app, we're going to build a new whatever, reimagine our platform, redesign our platform. But they don't know how to be a startup, right? They're like it's like entrepreneurship. It's like a big company with a smaller group of a team that isn't necessarily that familiar with working with APIs or building quickly or working with companies as innovative as us. And so there's this transition we've gone through, which has beckoned in, like, the need for these APIs, comes along with a little bit of a culture shock almost for some of these bigger institutional clients. And I'd imagine wealth management is similar, right? As an industry as a whole, right? It's a lot of these these types of financial industry offshoots just haven't innovated. Some of them don't even know what APIs are. So do you have any of that? Do you run into any of that, where they have this desire to innovate and build, but they're so used to doing things a certain way that there's a little bit of an educational aspect to it?
Yeah, I'd say, that certainly has been the case in the last 10 years. I would say recently, though, and the experience we're having at Bridge, it's amazing to me how quickly people will jump in the sandbox and start building a proof of concept application with our APIs. We've had a couple clients that have their beta version done by the time they sign the contract. So the firms are figuring that out. Now, some of those we're dealing with startups, and so that's in their DNA and it's natural. And so in large firms, I think that that's right. There's still a challenge there. They think that they're going to have to bring, like, market data is a perfect example, right? Like, I've dealt with market data for a long, long time and worked at one of the biggest market data providers. And the infrastructure we used to have to put into firms to get real-time market data was millions and millions and millions of dollars. Remember the local price servers in the branch, like that kind of infrastructure. And now that's gone. Like, it's all over an API. And that's if they don't understand it, the ones that are building it, the financial side of their business will understand it, because the cost to achieve what they're trying to achieve is, if it's not half, if it's at least half, if it's not an order of magnitude cheaper, because of all of this less services they have to pay, and then less development. And developers, like, if you get in the mind of a developer, the first thing they go do is look for something open source, something that will help them speed along. If they don't have to write a class, they can find a library to do it instead. That's in their nature. That's in the developer's nature. So if you give them that, then they'll use it.
Yeah, man, don't you love selling to developers? It's like, here's your API keys and your documentation. They might have a couple small technical questions, and then they want to be left alone. They're like off to the races. It's great. It's
I love one of the sayings that you have. I'll change it and not just steal it straight out, but the whole can't wait to see what you're going to build is fantastic. We use some case studies that talk to the same thing, where we can talk about the different use cases, because we're finding more and more use cases that we hadn't imagined, where people start using the data and building stuff with it. And it's really cool.
Yeah, our customers surprise us all the time with what they're building too. It's interesting. And the other, you know what else is really unique about the position that we are both in with our businesses is we get to see the most innovative stuff happening in FinTech and wealthtech before anybody else does. Because you're not going to build your house until you get your electricity and all of your resources hooked up, right? So before those houses even have the bricks start to get laid, they're working with companies like us. And so we actually track like an index of kind of what are people building with our data? Are they in, retail investor apps or quant style trading applications? Like what are the trends? What types of data are people buying, and what are they building with it? And it's almost like a leading indicator. It's an interesting.
Yeah, that's exactly right. That's right.
Yeah. So I don't know if anyone on the live stream saw, but BridgeFT and Intrinio announced a big partnership. That's part of the reason why we're here today. I think it was officially last week that we announced it. And I got to do it for Cheryl, Joe, but we got to give a big shout out to our friends at Dynasty Financial Partners for making the introduction. They're the reason that Joe and I met and started talking about all of this stuff and talking about APIs and deciding to partner and work together. So big thanks to Dynasty Financial Partners for the intro. Our team is over the moon excited about this, and I'm sure that yours is too. But Joe, can you tell them a little bit in their words, kind of why did we partner and what it means from your perspective?
Sure. So one of the things that happens when you decide to build a wealth management application, you start figuring out the pieces and parts you need. And the two most popular are, I need the data for my customers, which is what BridgeFT provides, and I need market data, and those get married. And that's a section of work to do that. And so the premise or the thesis behind the partnership is, if we can do that for them, bring them up the curve, then we're going to speed their development. It's going to sell more of your product. It's going to sell more of my product. And it's going to make life easier for the people that are developing the applications. So initially, we've made it so that you can take your Intrinio license and the BridgeFT API keys that you already have and fully use Intrinio's API through our API. And then the next phase is we're going to start taking and pulling market data and putting it directly into our APIs. So when you call a position call from ours to get the holdings that you have, we could already decorate that with a updated market price. We could show some fundamental data so you could build a quote hover or whatever you're going to do. So you're not having to fetch that and make multiple calls. That's the premise. And that's a big premise for Bridge is to the extent that I can close the gap between raw materials and finished product while letting the firm do the last mile that makes them different. That's the mission we have. And so market data was the first stop on that. We have a thing that we call the wealthtech API, which is the name of our product, the wealthtech API marketplace, which Intrinio is part of, is the first member of. The theory there is that we're going to shorten the cycle for everybody. When people come, they tend to come to us or you probably first in their journey, because they know they need one of those two things that you start with. And so I can explain to them, well, we have a whole series of other partners that are like-minded, API first, support you in the same way, that allow you to marry all of our tools to build the value chain of whatever application you're trying to build.
Yeah, it's huge. I mean, we historically, before we met, you guys sold to a lot of wealth tech type FinTech platforms, right? They need both. They need custodial data and they need market data. And our mission is to power innovation, right? And I was a FinTech developer who needed to integrate and marry all these APIs and all these resources together. And Joe, you've seen it too from your breadth of experience. It's tough. Like, you need a lot of stuff to come together under the hood in order to even have a chance at starting or launching or building whatever you want to build. It's so hard. And there are a lot of places to go to try to get data. There are good data providers, bad data providers. It's just a nightmare out there. It's almost like decision paralysis. And so from our perspective, it was like, we would love Intrinio data to be quickly and easily available for people to just get going. Like, we don't want to make that beginning part any harder than it needs to be when you're a builder, when you're getting started. And so it was a super exciting opportunity for us to say, yeah, let's integrate, let's make this seamless, let's make both types of data available. So we've already got a lot of joint customers that are off to the races and very happy that they don't have to go to 17 different places to try to get everything they need. So yeah, it's been really exciting to do that. And it's interesting, I think a lot about kind of like the difference between like a la carte and bundling. And there are areas in which things need to be unbundled, right? Like I think about the Bloomberg terminal as the best example. We think about ourselves as unbundling the Bloomberg terminal such that like you're only paying for the data you need. You don't have some huge ridiculous license for everything. And we've done part of the unbundling in that sense, but there's also areas in the app development space where you want consolidation, right? It's like you need to unbundle some things, but you also just need to make things easier for clients at the end of the day. And this consolidation feels like that for me, like it's making things a lot easier.
Yeah, totally. That example that I gave of having the data already decorated inside a position call is something that, I don't know if that's weeks of work or what from when they develop it, but to the extent that you can get there faster, it just saves everybody time and it fulfills both of our missions and makes the customers happy. So it's a no-brainer, and the market data plus custodial data in the same spot is we're first movers on that. There's not a lot of it. I haven't seen another example of that. And that's the first stop for most of our customers.
Yeah, it's really fun because wealth tech and wealth managers is one of many types of clients we sell to, but it's a very quickly growing client base and one of our target markets. And you're right, I actually hadn't even thought about it that way before. I was just so excited about the practicality of what our customers are experiencing that I hadn't really stepped back to say, nobody's done this before. It's never been consolidated in one place this easy before. And what is that going to mean for wealth tech, right? I mean, I think about, the mid and long-term mission vision for our company and the type of world we want to enable, right? It's like that wealth tech looks a lot different down the line when you start making these changes and making things available and greasing the wheels. And we're part of that, making that happen. So who knows, what's it going to look like in 5-10 years, Joe? It's going to be when everybody gets these resources just at their fingertips.
Yeah, I totally agree. It's going to evolve and the market will drive us. But historically, I have to say, specific to Intrinio, one of the things that was really interesting to us is that myself and several of our partners have built multiple apps and several companies. In the last company, market data was our second largest cost, and managing our data center full of our custodial data was our first, and behind employees, of course. The ease of integration to Intrinio just night and day between my company got bought by Refinitiv, and so we had to move all of our data to Refinitiv, which was an exercise. We go all the way back to when SunGard distributed price data, and we use them. So the evolution that's happened naturally and what you guys are providing is already so much better and simpler. When you marry that with the other ingredient of the custodial data, the firms can focus. It's not just lowering their costs, but they can spend those resources on making themselves better. And plumbing in market data is not going to make them better. Building better experiences and new ideas and focusing on that is what's going to be the last mile that makes them better. And when they work with firms like us, we open up a lot of resources for them to spend more time doing that.
Yeah, I mean, I'm sure you can relate to this, but we sometimes have come across prospects or clients who try to like recreate the wheel, like build they try to go find the data. I'm like, oh man, good luck, right? You're basically trying to recreate FactSet or recreate Bloomberg or recreate us inside of your existing company, right? It's like, I think there's a lot of cases, maybe it's not market data, maybe it's like other custom things you try to build for your own company. And it's like, man, just outsource, right? This isn't your core competency. It's like, you're going to waste so much time and so much money. Just get some specialists in the door who can take care of this for you, because to your point, you've got to be focusing on what you're good at and divide and conquer. It's wild that sometimes people think that they can figure it out themselves, but I guess when you're trying to save money, that happens sometimes.
It's fool's errand, yeah.
Yeah, definitely. Okay, well, let's transition to move into a little bit of like a CEO perspective, some CEO advice for the audience. What are you tracking? I mean, obviously APIs are top of mind for us and kind of unlocking innovation and making things easier, but what are some of the trends that you're seeing in the wealth tech space? Because as I had mentioned, right, like we have a front row seat to the innovation that's happening and what our clients are doing and building. So what are you noticing right now? What trends are you tracking in wealth tech?
I think it's in some ways a continuation of what it's always been, which is this pursuit to try to integrate multiple disparate applications and make them work together and end up with Frankenware in the end. And I think the realization of firms saying, you know what, I can build the presentation layer. If I got more people to give me APIs and deliver the data, I could then control exactly what I wanted to have. And that's happening from big firms down to small ones. So that's kind of a repeat of what I said before, but I think that's a big element that's happening. I think also the openness in how wealth management firms and the vendors and technology firms like us work together is much different than it used to be in the past. The selling relationship that you used to have in the past is not the same as it is now. We feel more like partners with clients. Some of that's the nature because we have developers working with their developers. So by nature, it's not. It's just a different mindset. And so I think that's a big change. And then I also think that if you look at the RIA space, the consolidation, and historically, part of being independent was to go out and find every piece of software for yourself, stitch it together, and then worry about making it work. And I think part of what's happening there is the consolidation is taking the value add best practices that you have, moving up to the company level, kind of like the government does, and then allowing the wealth managers to focus on the things that make them different. And so I think firms like Dynasty and others, are good examples of that, where there's an opportunity with some scale to build a much better technology platform that's uniquely theirs, leveraging partners like us to get there. And I think that's going to take hold in the brokerage market and everywhere else as well. I think the mid-sized brokerage is probably the next mover. They're still using mostly off-the-shelf software and trying to stitch them together. And they're going to recognize that to compete with the large folks and to further differentiate themselves, they're going to have to produce something unique. Yeah,
totally. And to our earlier points, right, in order to do that, you got to have the rest of your resources just figured out and taken care of and easy for you. So yeah. That's encouraging to see. I mean, and from the flip side of the table, I'd imagine the market is demanding that, right? Like as an individual myself, I get just ridiculous amounts of investment advisors messaging me all the time and I'm like, well, what makes you different? Like everybody's trying to manage my money, right? It's like it's a very crowded space, and I see that proof just personally on from a personal anecdote, right? I mean, it's an extremely crowded space, and you do have to differentiate yourself. What do you think some of the ways they are differentiating themselves are? I mean, is it platform, or is it something different?
I think it's technological approach. If you look at a world of post generational wealth transfer, somebody wants to find somebody that's under 50, certainly under 40, wants to find a service. What's the first thing they do? They Google it. Maybe they look in the App Store to see if there's an app. They're gonna look at using a service. They're going to go evaluate their app. They interact digitally with people, and wealth management market still has not created that. The client portal, which was my last world, was the thing that was going to change all of that, and that's not true. It's it needs to get to where you can digitally communicate with the advisor and to have important conversation when you need to, but then find other information easily or be reassured, and that's all going to happen digitally. And so I think that we haven't seen any of that yet, really, in the large scope of things. You have firms like Ed Jones that show their technology on their commercials, but by and large, many of them aren't pushing technology first. And I think an advisor needs to be at the point to say, number one is the quality of my relationship with you is the first differentiator. That's what you'll find out. Right. Secondarily is how I work with you and support you digitally, so we maximize everybody's time and you get all the information you need, and it's very seamless and straight through and what you're used to in dealing with all your other relationships. I do the same thing. And until they can say that, I think it's going to be tough sledding to differentiate yourself.
Yeah, I mean, this may be crass, right? But the generation of people who want to show up to the office and have a conversation with you is gonna die, right? I mean, that's just kind of how it is, and
I think it's been buried.
Generations to come are gonna be technology driven. I mean, it's only gonna be more and more technology driven. We'll probably never go back in reverse with technology, right? So the demand for that is gonna just skyrocket. But like I said earlier, you've got a generation of advisors and platforms that haven't had this pressure before. So it's a totally new world for them. It's going to be interesting to see what they do.
Yep. Yeah, and if you look at the trends, from the CTO reports and CB Insights and people like that, the amount that gets spent on technology just keeps going up and up and up and up. And some of that's productivity focused so that the advisor can do more. But by and large, it's got to be preference to the investor and the consumer and how they want to interact and deal with their life, and that's where they're going to differentiate. And that spending is going to continue to go up, and that helps you scale too. So you don't need as many offices and expensive conference rooms and things like that.
Yeah. Talk to me a little bit about, like, I'm imagining, right, like individual RIAs, they're not developers. Right? Like they're not gonna build their own or maybe they are, right? So who are the ones that are actually gonna be doing this customization? Is it consulting shops, or kind of where does that piece fit in? Because or are these RIAs all consolidating into groups? Like, kind of how do you think about that?
I think it's two or threefold. One is right now today, an RIA needs to be probably $1 billion plus to spend anything on the real technology resources, and that whether that means hiring a full technology team or using outsourcing to build things like a client portal. We have some firms like that. You'd be surprised at how some, like because we had two sides of this business. We had individual RIAs using the online site that we had, and then we were attacking towards this enterprise side. We actually had two customers that were on this side that used our APIs and built an application and became an enterprise themselves and actually started selling a service. One created a TAMP, the other one created an advisor referral service. And so that level is changing. Now, that said, I also think there's a dynamic where in the RIA space, similar to what the brokerage space is, there's some advantage in numbers and having the support of a big back and middle office and technology stack. And so I think you'll see more of that, and people will adopt their technology from that rather than having to stitch together everything themselves. So I think both of those things will happen. And then I think new entrants will come in and start from scratch with their own technology and build the better mousetrap. We have several clients that are in that area too, firms like Zoe and similar, where they're going to start from scratch and build the digital platform and help RIAs move up the stack faster. Advisor Stack is another client of ours that's doing something similar.
Yeah, wow, it's exciting to think about. Another question for you is, it's not been a great year or two for tech, right? It's been a little rough out there. Everybody's saying FinTech valuations are just way overvalued and funding is dried up and nobody's IPOing, and it's just, it's been rough. Do you have any thoughts on that? I know that's very broad, and also, has it affected the wealth tech space? Do you think you've been seeing any effects there?
Yeah. Well, we're in a recovery now, supposedly from CNBC, so I feel like things are getting better.
Yeah.
It has been tough. The one thing that I always tell people on my team is that, if you build what you're building in that kind of environment, you're a lot stronger than if you built it with a ton of wind at your back.
Yeah.
And so that's the one positive side of that. For us, it's been mixed. There has been certainly delays in decision making. That's all tied to them having funding and prioritizing projects. We have now a unique factor where, like in my old company, we did the whole implementation and project for them. So we control the real resources and we could time that ourselves. We don't do that now. Like when the firms come to us, they have a project and they're going to use our API, but then they have to do the work. So they have to get the developers lined up and get their funding and whatever. So that has made it difficult. Things have certainly delayed. We've seen we have a really strong pipeline with a lot of late stage in it, but it does go from month to month as people are dealing through this issue. So I'm very hopeful for when that goes away to get a little bit of tailwind on it, and that will happen. But the thing that I'd say is that despite all of that, there's still a lot of people building a lot of new things. And they're doing that because it makes a difference in the business and whoever their target customer is. And that technology advantage is valuable even in a tough market like today. And similar to our own situation, when that opens up, it's going to be even more of an advantage because it's going to help people move faster into a more supportive market and environment. So I don't think fundamentally there's been any change. I think this was all, we did it to ourselves. The valuations in 21 weren't realistic. So if you compare your 22 valuations or 23 valuations to 21, then they'll never be the same. Go look at the amount of money that poured into wealth tech and fintech in 21. It was outrageous. So that's a bubble in and of itself. And then, the market comes around that. And that said, there's a lot of people that have built a lot of good technology, not necessarily, not all of them may be good businesses. So I think you're going to see consolidation of technology providers. That's pretty significant in 23 and 24 especially. And I think for infrastructure providers like us, that'll be a benefit because, hopefully our clients become bigger. But it will change, and it will, the market is there. What we're servicing and what we do for folks makes a difference. And makes things better. So as long as you're in a situation where that's there, you take the headwinds and get yourself geared up for when the tailwinds come along and then ride that high.
Yeah, we've noticed a lot of the same things. We have such similar client bases, and I think you make a really good point about if you're building and continuing to grow and scale and survive and thrive in this environment, you are going to be way stronger than anybody else who was building in the inflated period. So that's such a good point. Do you have a piece of advice for anybody who is building in the wealth tech space in this environment today?
Yeah, I think obviously right now your funding to keep driving the machine is critical, and so don't get hung up on valuations right now because everybody's in the same boat. And if you believe in and you have market acceptance and proof that what you're doing is good and right and has a big TAM and upside, then find a way to continue that and drive towards that. And if you're growing now in this environment, then figure ways to put the pedal down a little more maybe, because if you can grow successfully now, then when things are in better shape, you will grow a lot faster. The example I give, when I started in January 22 at Bridge, so we were still hangover of 21, where everybody's like, oh, well, you've got to have triple digit growth every single place, and it's like, and our growth wasn't triple digit, but it was pretty good, and it still is pretty good. But in that environment, in that lens, it was like, oh yeah, okay. I talked to the 10 investors I talk to every week that are cold calling. Right. Now you say the numbers that we're doing, and it's like, wow, that's pretty good in this environment. So it's just perception, just like everything in life. It's perception against your expectation. So if your expectations are off, and then you get a realistic perception, then you're going to feel disappointed. So you need to make sure you're setting yourself at a right baseline and recognizing what's important.
Yeah, that's great advice. Fantastic. So we were talking earlier about giving people extra time in between meetings to get back to whatever they were doing. So I think I have one more question for you, and then we'll wrap things up so that people can have some time on their lunch break to get back to whatever they're doing. But the last question is, what are you most excited about, looking forward to, kind of what is the outlook for BridgeFT in 2024? Anything that we should know about that's coming up or that you're excited about?
Yeah, nothing I'm going to debut here, but we have several exciting big things in the works.
Okay.
And if I can get one of those to pan out in the next 6 months, then I'll be very, very happy, and the team will be very happy. We have a lot of great clients. We're helping people build amazing new things. That's, for me, is the most exciting day to day, is to get the accolades from clients and realize how much you're helping them. There's a big opportunity for us to expand beyond that. We're really touching this infrastructure space in just a couple slivers, and our scope could be really, really big. And so we're proving some of that, and we've got a couple big potential partnerships that we're working on that will be game changer type things. And so when they come along, you'll be the first one to know. Great.
Well, it was worth a try, but it's still exciting to know what's coming down. There's some stuff coming down the pipeline, so thanks for that. I noticed a question from Tess. Is this being recorded? Yes, this is being recorded. We will be posting it online, YouTube, LinkedIn, all over the place. So we'll make sure to promote that out there so everyone that missed it can see it. But thank you so much, Joe. Thanks for joining us. It is so much fun to be able to just peek behind the curtain with another CEO and give some advice and talk things through. We are extremely proud and excited to be partners with you. So thanks for joining us today.
Yeah, thank you very much, and likewise. We're thrilled at the opportunity here.
Yeah, it's going to be big. So thanks everybody for joining us. I'm going to end the webinar, and we'll be posting the recording soon. Everybody have a great rest of the day. Thanks.
Thanks, folks.